As we mentioned, the Finance Minister Tito Mboweni presenting his budget statement tomorrow amid a depressed economy, record high unemployment and an ailing private sector. President Ramaphosa has repeatedly emphasized the importance of enhancing investment for growth and job creation, both from abroad and domestically. Now, experts say one of the key factors that foreign investors consider is the state of public finances. Dr. Nthabiseng Moleko is a development economist at Stellenbosch Business School, and she joins us now to share her views about this, what the problems are and how they can be fixed. Thank you so much for joining us.
Thank you so much for having me, and a very good evening.
Okay, so there is a strong positive correlation between FDI inflows and business confidence. Given our current circumstances and the criticism leveled against government, especially we mentioned earlier on the expenditure and the allegations of corruption, what are the indicators on whether or not we will manage to recover sooner?
So the first thing I would say is, number one, we have to have a decisive economic strategy. I think South Africans keep saying that we're tired of planning, we're tired of planning, there's a problem with implementation. But I think the problem really in South Africa is not that we are tired of planning, is that the plans don't really result in enhancing productivity, in enhancing economic growth, inclusive economic growth, in decisively dealing with job losses, but also the unemployment that is out of control. So we need a decisive economic strategy that has a clear vision on how we're going to, one, generate labor demand, and two, stimulate productivity. So I think for me, in order for us to attract investment, we have to crowd in investment by dealing with the problems of our own economy. I think the second is we have to look at how do we have mechanisms to enhance our productivity.
And let's talk about those mechanisms in just a moment, but I want to look at quality of governance. I mean, that's one of the big factors. Let's look at the state-owned enterprises, the state of them, especially from mismanagement. I mean, will we really be able to attract investment for growth and job creation given these circumstances I've just highlighted?
So the issue of governance affects the ability for the state to use its fiscus efficiently. So, in example, how much of our fiscus is actually leaking? What proportion of our every 1 rand we spend, we want to make sure that every 1 rand we spend in the budget goes to service delivery, goes to infrastructure, goes to the social and the health and the education. And I think the proportion of that, there is a significant proportion that is being lost. What this means is that the multiplier effect of the fiscal multiplier is reduced because it's not reaching the end user, which is our people, which is our communities, which is the road, the infrastructure, and so on and so forth. So here we need to deal with that because it reduces the ability of public investment to be effective in dealing with poverty, in dealing with the lackluster infrastructure, particularly from the spatial planning of apartheid. So we need to deal with that. The issues that drive FDI and the drivers of attracting FDI are slightly different from just looking at governance issues. I think from a policy perspective, South Africa has adopted a very policy-friendly economic liberal framework that actually is supposed to have increased financial inflows, particularly capital inflows. But what we have seen is that this has not been sufficient, particularly if you look historically, and I don't want us to only look at a year ago, 2 years ago. We always need to look back to look at the GEAR economic strategy, the ASGISA, the GIPSA frameworks, and the NDP, which is an economic, I would say, vision rather than a plan. But those have not been sufficient to attract financial flows. And that speaks to the structural problems.
We'll look at foreign divestment in just a moment, but I want to talk about something that you hinted at earlier on. The public sector, let's look at that. It's expected to shrink in terms of the money available to spend. So how can each government department and the public sector in general reprioritize its portfolio of projects and programs to ensure that they focus on value optimization?
Absolutely. So I think the first thing I mentioned was the issue of enhancing productivity. The economic cluster should look at how do we improve agricultural productivity through the economic cluster. We've got agriculture, we've got agricultural reform. If I go through the numbers of how much we're spending in the last 2 decades on land reform, agricultural programs. If we look at industrial productivity, how are our manufacturing value-added sectors benefiting from the manufacturing sector, the cluster programs, the DTI incentive programs? All of those are currently on our budget, but they're not effectively helping us to industrialize further. So the component of manufacturing value-added as a proportion of GDP has actually contracted. So it says that we need to review the type of instruments we're using. They're not effective. They're not also labor absorptive. So what we need to do is have a serious review of the policy tools and the instruments, because the money is there. So the efficacy of the tools is not yielding results. And I think for us, we need to accept that fundamentally that requires a comprehensive, different approach, particularly from the industrial policy side.
Now, we've seen that foreign divestment is becoming more pronounced, especially during COVID-19, parent companies selling off their assets. Now, I want to look at how COVID-19 has also impacted on our economic transformation and industrialization plans. Are we ready for the divestment that may rise, because there's a prediction that it will? And can the Africa Continental Free Trade Area fill this gap?
Okay, so there's two legs to your question. Is that has COVID reduced our investment levels further than where they are? I think globally there's an acceptance that FDI flows are not only on a downward trajectory, but also there's more competition, and South Africa's risk premium is higher with the investment downgrades. So it's really more expensive to come to South Africa, but also the policy space, particularly the ordinary investment pathways, are into financial capital and minerals and energy in South Africa. They haven't really gone into your industrial sectors. So what South Africa has to do is to crowd in investment. This is what I would propose. We have to look at ways to use our domestic surpluses to actually crowd in further investment that attracts FDI inflows in the long run. I think the first point. The second is the African Continental Free Trade Agreement is an opportunity for us to actually enhance our building our SMMEs, making sure that our SMMEs that have products are able to offer those products into the greater markets. So the continent forecasting a population in the middle income rising in the next decade of over 350 million Africans who are going to spend approximately $100 a day. This means that those consumers need food, need products, household goods. All those consumables are usually imported from China and other type of markets. And this is an opportunity for SACU, for South Africa, other African countries to actually increase their own production. And this requires the industrial strategy, the financing of trade finance, and also your DFIs to come on board to actually ensure that we produce products that can be sold and exported into the greater continent. So there's an opportunity there.
And hopefully we speak to you again to see what the budget statement says and if it is in line with what you say policymakers should be doing. Thank you so much, Dr. Nthabiseng Moleko, Development Economist at Stellenbosch Business School.